Morning, Steve here in Chicago with the morning grain comments. Well, it's good to be back to Chicago. Last week I was in Nebraska and met a lot of good people. Some of the high points, I think, is that the basis out there for corn, beans, wheat, meal, oil is record wide. And a lot of farmers are asking, why is the basis so weak? And it could be a combination of the futures market having a lot of fund buying in there that probably pushes prices up a little bit above fundamentals. And it suggests that the basis has to do all the work if the fundamentals are bearish to find value. Also, it seems like the volume that's coming in the CME is all this fund money, and it doesn't really reflect some of the basis levels and some of the bearish fundamentals. So that seems to be number one. Number two is obviously there's immigration issues out there. A lot of the beef plants have immigrants working there, and so they need those people to work there, but it has some other issues, social issues that the Nebraska people are trying to deal with. And then finally, it looked like farmers out there will probably plant the same amount of acres, maybe a little bit more beans. So much of the ground is irrigated that the corn yields are high, and they kind of tend to offset the fact that soybean prices are high relative to corn. So the farm economy out there is good. It's not great, but $10 beans, high corn yields, and the crop insurance payments have helped the situation there. But not a lot of growth is expected in Nebraska farming until prices get better. Overnight, we saw soybean prices up, meal prices up, wheat down, and corn about unchanged. When we look back at the USDA last week, they kept the soybean carryout in the U.S. unchanged at 420 despite the higher acres. So that offers a little support to the bean market. Also, we could see some rain this week in Brazil that could slow farmer selling. Also, it's Carnival this week, and that could slow Brazil farmer selling also. And so here in the United States, old crop soybeans, farmers are pretty much sold out. So there's not a lot of overhead resistance if the market wants to push a little bit higher. Technically, though, we've taken a lot of premium out of the soybean market. We're up against some long-term trend lines, and a break of that trend line could be negative. As far as the corn is concerned, the USDA did lower corn acres, but they kept the carryout about unchanged. And some people think that they might be a little high in yield, and then they might be a little bit low in demand. So the final carryout might be a little bit lower. That offers support to corn. But the farmer here in the United States has a record amount of corn to sell. That could limit the amount of rally we can do in corn until we get into a weather market. And for the wheat, they did lower acres, and they did lower production, but they also lowered demand a little bit, leaving the carryout about unchanged to maybe a little bit lower. Not a lot of differences of opinions on the wheat U.S. supply and demand. There's too much wheat in the world for the wheat to rally. Corn and wheat charts also have taken some of the premiums out that we saw earlier in February, reflecting the too much supply globally. Here in the United States, 6 to 10-day outlook calls for normal to above temps, normal to low precip, and we'll see if that causes any early growth in wheat or any early planting or field work in the corn. So choppy trade overnight. We've got first notice coming up. Could be some heavy deliveries in oil and wheat. Could be some moderate deliveries in the beans. We saw open interest drop pretty dramatically on Friday as people get out of those March positions before first notice day. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.